Hey everybody, this is Dan Ferullo with Coldwell Banker. I'm here with my friend Justin Perry.
Hi.
He's a mortgage loan officer with it's not Mortgage Master, it's Loan Depot. He works in Portsmouth, New Hampshire. Justin is the branch manager of the office here, and he's here to answer a couple of questions.
Thanks for having me.
Thank you for agreeing to do this with me. First question, Justin: should everyone get pre-approved before they start to look for homes?
Yeah, right into the hard hitting questions.
Yeah.
They should. You're kind of wasting your own time as well as the realtor's time if you're going out looking at homes and you're not certain you can buy a place.
Definitely.
And, I mean, a better example is if you're submitting an offer and I'm selling you my home, I don't want to consider taking my home off the market for you if I don't know that you're pre-approved.
Yeah, absolutely.
Oftentimes we find the people most reluctant to get pre-approved are those that are convinced that they are pre-approved. I've done this before, I've got great credit, I'll get pre-approved when I go to submit an offer. The problem with that is, once they go to get pre-approved, maybe they find something on their credit. Or maybe they find that new job that they started, the income can't be used. But then it's too late. They've got an offer in, their hopes are up on getting this dream home, and it's a little bit too late. It takes 15 minutes, and absolutely, if you're thinking of buying a home, everybody should call their mortgage lender and get pre-approved.
Awesome, that's a great answer. And it's good to know that it only takes a couple of minutes for them to, because I think sometimes buyers are a little hesitant also to take the time to do that as well. So that's a great answer. How long does the mortgage process take approximately?
It depends how organized you are.
Okay.
If someone's got all the documents together, basic stuff, pay stubs, W-2s, has a good understanding of how much they make and can get documents in timely, you could put an offer on a home and easily close in 3 weeks. A little bit about that depends on the appraisal. It's out of our control how quickly that can get done. Appraisals right now are probably taking a week and a half.
Okay.
So if you get all your docs in today and you're pretty organized and the appraisal gets ordered up front, there's no inspection issues, you could reasonably purchase a home open to close in 3 weeks, and it really wouldn't be that stressful. Less than that can be done. You'd probably find it to be a little bit of a stressful process on both sides. And then of course 4 weeks plus is the norm, and that's plenty of time to get it done. And
right.
You're kind of waiting at the final week or two just to close. Everything's done by that point.
Okay, great. So can you explain a little bit about interest rates and what it will mean for buyers if interest rates go up as predicted?
Yeah, I mean, it's anyone's guess where rates are going to go, right? We've been pretty spoiled for 10 years now with near historic lows in rates. But what I always tell clients is if you like the home that you're looking at, or your current home, and you want, whether you're talking about refinancing or purchasing, if you can afford that payment, it's something you should probably consider doing it now. If rates go up, I don't think they're going to go up to something like 5.5%, 6% anytime soon. But they're near 4.5%. So if you're debating buying a home now or waiting, the difference between 4 and potentially say 4.5%, still a really good rate.
Yep.
But that could be a couple $100s a month. In fact, it would be on, say, a $350,000 house, right?
Yeah.
It's the same thing as spending $380,000 today at 4%. So the low rates that we have in comparison to if they were higher allow you to buy a lot more home than you otherwise could.
Excellent. So it definitely means you should get out there.
Yeah, I don't tell people that the rates are going up, so you should buy. I think the message that I try to give is that if you're comfortable with the payment now, you should really consider making a move.
Yeah.
Because waiting has proven over the years to not only have prices appreciated, especially here on the Seacoast every year.
Definitely.
Rates have been pretty flat. They've gone up and down. But even if prices continue to go up, your payment's going to be higher. So worst case scenario, prices go up and rates go up. Now you're going to find yourself in the position where that $400,000 house could literally be $500 more a month.
Right. Okay. All right. Great. So on to the next question. Some buyers I talk to are concerned that there's going to be hidden costs that will come up at the end of the transaction that they weren't aware of. Does this happen?
It can. It shouldn't. There shouldn't be new fees introduced into the process with TRID till RESPA integrated disclosure. There can't be new fees or increased fees at the finish line. You can't say surprise that the attorney's charging you $1,000 instead of $500. I think the problem a lot of folks run into is they're so hyper focused on the down payment that they forget about the closing costs.
Okay.
It's not to say that some things don't change. More taxes might be needed at closing. You forgot you needed homeowners insurance. Those are the two biggest discrepancies. But the biggest number that can shock people is they're hyper focused on their 10% down, their 5% down, whatever it might be.
And they expect it's going to be just that.
Completely forget that closing costs and taxes and homeowners insurance in the Seacoast region is easily $8,000 to $10,000. So it's a big number that people tend to lose sight of. Not all, but most. Forget exactly how much above and beyond that down payment they also need to budget for.
Okay, good
So
to
it
know.
shouldn't be a surprise. It's disclosed up front,
Right.
but some people forget to budget for it.
And to some, and as a loan officer, is that something that you try and make people aware of at the beginning of the transaction, that they're going to have those?
Oh yeah, it
costs
gets
that are gonna-
disclosed and discussed many times.
Okay.
I think that the process, you can get busy with home inspections. I think those are the ones where you might see it most, where it gets a contentious home inspection and renegotiations, and it becomes a 2-month long process in buying the home.
Yeah.
That rightfully so, you've forgotten what we talked about 2 months ago.
Yeah.
Or that you even got redisclosed 5 times because you're so more focused on now, am I even buying this house?
Right.
You know, and it kind of springs on you. But there should never be surprise fees that get introduced towards the end.
Okay, great. So many millennials are choosing to rent instead of buy because they think that either their credit scores are too low or that they don't have enough money for a down payment. What advice would you give to those people that would like to buy a home but think that they can't?
And I see that a lot. I think a lot of younger folks, maybe it's advice from their parents because they haven't bought a home in a while, that you've got to save, get 20% down. You don't want to pay PMI because it's this thing that no one quite understands, but they know they don't want to pay it, right? They don't quite know what it is, but they don't want to pay it. And when you talk to them and they realize that you can there's some great programs with 3% down. They didn't realize that. There's no PMI. Like, really? Well, I don't have the credit. 660 credit, 680 credit, ideally, for something like that. Then the person who's got 5% down with 700 credit, all of a sudden they're thinking, why am I renting? Right? So I think it's an education thing. Whether they've heard through parents or uncles or someone giving them advice, or it's just the old industry norm of 20% down. They should at least sit down and talk to someone. It kind of comes back to the pre-approval phase.
Right, definitely.
And put a plan together to see if and when they'd be ready to buy.
Okay, great. So this next and last question, it's also a little bit of a benefit for me as well, because I'm curious about this thing, or this question, because I'm planning on purchasing a home sometime in the next couple of years. So what is the best thing that someone can do to get ready to buy a home if they know that they want to do it in the next couple of years but aren't quite ready yet?
Well, the answer is going to be different for everyone, right? Because someone's got to work on their credit, someone needs to save for the down payment. It's the pre-approval. It sounds silly to get pre-approved 3 years before buying a home. More often than not, when someone tells me they're buying in a couple of years and we're doing a pre-approval, that timeline gets moved up to like 6 months.
Okay.
Really. Because you shouldn't be just trying to fix your credit without even knowing what your credit is. I hear that all the time. I'm fixing my credit. Well, what is it? I don't know. I'm just paying things on time.
Yeah.
Talk to a mortgage lender who knows what they're doing. They can pull your credit and give you things to work on your credit. That will give you steps you can follow to fix your credit. Down payments. Maybe you don't need to just save your biweekly paycheck each month for a down payment. A lot of folks don't understand you can get gifts. You can borrow from a 401k. There's grant programs out there. So again, it comes back to the pre-approval. If you've got credit, but you're waiting for the down payment, maybe there are some options that you've got available to you already that you didn't realize. So the best thing you can do, again, is different for everyone. But I would say invest 15 minutes of your time, talk to a mortgage professional, have them take a look at your situation, and come up with a plan. Because if you're just sort of saving a couple $100 when you can, making sure credit cards are paid on time, that's good. But you could probably move your 1 to 2 year timeline up to, we're in November now. Probably put yourself into the spring market, right? 6 months away. There's no reason why someone can't clean up their credit, save a decent down payment, again, 3%, between now and the spring market, which around here starts in almost March.
Right. So I think that the kind of overall theme of the interview was, if you have questions about a mortgage, that the best thing to do is to sit down and talk with a loan officer, because that's where you'll find out exactly what you can do. You know, what you
Yeah,
can
I mean,
do.
it sounds self-serving to
Well,
have
no,
an
I think
answer,
that
but
I think
sure,
that it's beneficial to people.
because if you're going to buy a home, you're going to have your credit pulled. That's the big misnomer. Is everyone's always concerned. I don't want my credit pulled. It's going to impact my score. It's not going to impact your score. If you have one person pre-approve you and pull your credit, if you're a 750 FICO, you're going to remain a 750 FICO.
Mhm.
Now, if you've got major credit issues, maybe pulling your credit's not the best thing. If you know you've got real soft credit that you've got to work on, and you foreclosure or bankruptcy or something, maybe now is not the time. But if you're serious about buying a home, you have to pull it anyways.
Right.
You might as well get it pulled now. Take a look at it, uncover any surprises on there, and come up with a plan.
Awesome. Well, Justin, thank you so much for sitting
for
down and
having
talking to me today. If you like this video, please follow my page. I'm going to be doing a series with some other professionals that help me in my business. And also, if you like this video, please make sure you like the video and send us comments. If you have any questions about mortgages, also give me a call. I can either direct you to Justin, and if you have any other questions, we can get those answered for you. So thanks so much for watching, and I'll see you next time.